When the unexpected happens, your savings decide whether you panic or stay in control. Emergency funds matter because they serve as your first line of defense against financial disruption. Without one, even small unexpected expenses can throw off your budget and force difficult decisions like skipping payments or borrowing money. Over time, this can build into a pattern that is hard to escape. Having money set aside reduces that pressure. It gives you the ability to think clearly and make better choices instead of acting out of urgency. It also protects your long-term plans, since you will not need to touch savings meant for investments, business goals, or major life purchases. Figuring out how much you actually need depends on your personal situation. The general idea is to cover your essential expenses for a period of time, usually around 3 to 6 months. This includes the basics, such as housing, food, utilities, and transportation. If your income is stable and predictable, you might be comfortable staying on the lower end of that range. If your income changes often or you rely on freelance or commission-based work, having a larger buffer can give you more security. What matters most is understanding your own monthly needs and building your funds step by step until it reaches a level that feels reliable. Where you keep your emergency fund is just as important as having one. The money should be easy to access but still kept separate from your everyday spending. A savings account is often a good option because it keeps your funds available while earning a small amount of interest. The goal is not to grow this money aggressively, but to keep it safe and ready when needed. By separating it from your regular account, you also reduce the temptation to spend it on non-essential things. Knowing when to use your emergency fund is key to making it work properly. It should be reserved for real emergencies that affect your ability to cover basic needs. Situations like unexpected medical costs, losing your primary source of income, or urgent repairs are valid reasons to use it. Planned expenses or lifestyle purchases should not come from this fund, since that defeats its purpose. Once you use any portion of it, the next step is to rebuild it as soon as possible so you are always prepared for the next unexpected situation. An emergency fund is not about perfection or hitting a specific number overnight. It is about consistency and preparation. Even starting small can make a difference, and over time, that steady effort creates a strong financial buffer. When you have that safety net in place, you gain more than just money set aside. You gain peace of mind, confidence in your decisions, and the ability to face challenges without losing control of your finances. If this video helped you understand accounting a little better, don't forget to like, share, subscribe, and turn on notifications for more accounting tips and guides. See you in the next video.